So we're here at Intersekt with Ben Buckingham, CEO of Primary and well-known Australian entrepreneur, second-time founder, previously Identity. But how are you going?
I'm great. Yeah, really loving the conference so far. It's been fun.
Yeah, eager to get into Primary, and I think you have a few announcements today. I saw in a post recently from you, you kind of unbundled or articulated in a better way, Treasury management. I think it's a broad term, but I guess how do you define Treasury management in a Primary?
Yeah, one of the things that I do think is confusing in the industry is that Treasury and Treasury management are used all over the place. So it's hard to get a picture of exactly what different companies are talking about. But for us, Treasury management is really focused around helping CFOs typically, or finance teams, or treasurers in bigger companies manage the cash of a business. And that typically involves, on the cash management side, thinking through what banking partners they should be using to park their funds, how they should be thinking about optimizing interest on the cash, how to make sure they've got enough cash in all of their accounts across the world to make sure that they can pay payroll and meet any other payment obligations. And then as you start getting into the more sophisticated realms of treasury management, it's about thinking about where your currency risk sits within the business, where your counterparty risk sits within the business. And then as companies become more and more sophisticated and bigger, they might take on debt as an example. And so part of treasury management is thinking about how do you meet your debt obligations alongside your other cash management obligations, and essentially making sure that there's enough cash in the business at all times to run it effectively.
Yeah, that's really interesting. Particularly, it's not just about the yield, also bank risk.
Yeah.
Looking at the banking downturn of Silicon Valley Bank and those other banks being too highly levered a few years ago, and then also the debt side, because I think a lot of tech companies don't always think about debt, but when they do, they do. It's very interesting. How do you, I guess, within the product itself, manage debt or manage those banking risks? What does that look like?
Yeah, so the first version of our platform is very focused around the cash management side of things, so helping the companies to optimize yield on their cash across different time horizons of the business. And so a number of our initial customers are venture-backed companies that have done significant fundraisers. They've got cash that they have raised that they're going to need over the next 12 to 24 months, and they're thinking about segmenting that into operational cash, funds that they might need in the next 6 months, funds only in the next 12 months, 24 months. And so it's about thinking through what's the right liquidity framework for those different tranches of capital and where should they be sitting. And then the other dimension of it is the one that you mentioned, which is the counterparty diversity. So how do I make sure that I don't have another Silicon Valley Bank style event where my main bank goes down and therefore I can't make payroll on Monday if that happens, and actually spread the funds across a few different institutions and asset types that are all still low risk, so that you've got a more balanced overall cash portfolio.
Yeah. What are the different assets types at the moment? I think C is 3 kind of tranches, is that correct?
Yeah, we think about it in terms of the actual cash within the platform, reserves that you want to keep for the business that you might need in the next 6 months, and then things that are more strategic. And so for us, the things that are in the strategic bucket would be slightly less liquid money market funds, 3-day liquidity type products, and different types of term deposits of various durations. You might have things like certificates of deposit in there as well. And then in the shorter duration piece, you'd be looking at other types of money market funds and various kinds of high interest rate bank accounts, notice accounts potentially in there as well.
Yeah. One thing I think you guys have done very well is clearly carved out the customers that you're looking to serve. And I think that high growth market, I see Vow and other fast growing businesses have gone directly to you guys. Is that, I guess, the plan moving forward, or just doubling down on that and maybe expanding it more broadly? How do you see the different customer bases that would be attracted to treasury management? Because I did see also, reading through some of your case studies, an earlier startup putting 90% of their cash actually into the platform as well.
Yeah, so we're a wholesale platform, and so we can work with anyone that is a sophisticated investor, focusing very much at this stage on venture-backed companies where that use case is centered around idle cash that they need to optimize. We are already starting to work with those companies in multiple currencies. Often venture-backed companies will raise in a combination of US dollars and Australian dollars, and so they'll need the US component of that as well. And then as they become more mature, they'll want to expand internationally and have bank accounts in other countries. They'll start running their businesses there as well. And so we want to be able to support them with their international funds movement between those bank accounts, manage that currency risk, and manage their global treasury. And we've just started working with our first mid-market corporates that are in that 100 to 200 million revenue range, and that's really where we'll be focusing a lot more of our go-to-market efforts over the next 1 to 2 years as we crack into that mid-market segment.
Some interesting trends coming through the platform. Is there anything particularly there you guys are seeing from either your customers or just insights on the platform itself?
Yeah, I think one of the big takeaways is, and one of the reasons that Primary exists is because if you're a big corporate, you can go to one of the big global transaction banks and get decent offerings in cash management, treasury management, liquidity management. You can work with a really big treasury management system, and the banks will offer, if you've got very significant deposits or very significant debt portfolio with the bank, offer decent rates on business bank accounts. But if you're a smaller business, you've raised in that $5 to $10 million range, you've got 20 to 50 employees, much more difficult to get high interests on those bank accounts. And so a lot of the funds that are coming into our platform are coming from clients that they want the day-to-day transaction banking from bigger banks, but are looking for more that they can get, more yield that they can get from their cash.
Yeah, and then even from personal product experience, the business banking from the banks can be very clunky in its own right, and as a tech company, there's just an attraction to a smooth product experience.
Yeah. I think there's still lots of friction in the KYC process when you're opening up the accounts. We've got many clients that they'll have multiple directors and having to get directors to go into branches to sign documents. We really think that there's a world where everything should be able to be done digitally, and I think to a much better and stronger KYC AML standard using digital methods rather than using paper-based documents and wet signatures and physical certification of documents, none of which I really think drive a safer AML CTF environment. I think we can do a lot more with technology, so we'll be investing heavily in that as well.
Yeah. And exciting news as well, you guys have just recently announced a new raise.
Yeah, we just closed our seed fundraising round, which was led by Carthona Capital, and we had 2 new investors join us as well, Resolution Ventures out of Singapore and No Brand in Australia, and we had our existing investors all follow on into the round who have been super supportive, which are MacDoc Ventures, Archangel Ventures, and Afterwork Ventures.
Yeah, great. And what's next for the build on the platform? Where you guys focusing on, or what you can talk about?
Yeah, so today we're very cash management oriented, predominantly Australian and US. We really want to be able to support the companies that we're already working with more capability to help them internationally. And so that's helping them open up real bank accounts in the US and in the UK and in other markets, being able to do FX seamlessly between their various accounts, bringing in capability to help them with international exposure. And then we'll be building in debt management next year as well, as we transition to being what we describe as a command and control center for the global CFO, so financial operations software for these businesses.
That's clearly where you guys bet on, is around being that CFO and being a kind of a key trend, but maybe from a macro standpoint, and you've been in fintech for a long time.
Yeah.
It typically goes in waves. The past 2 years has been a big down period in the public and private markets, but the light is pretty clearly at the end of the tunnel. Where do you see the next run up for fintech moving forward?
Yeah, I think we're entering into a phase now where the Fed has indicated that they will be doing multiple rate cuts this year and into next year. And typically, as interest rates drop, venture capital funding increases, and that's not just in fintech, but elsewhere as well, and unlocks more business models. And so for us, we're very much a yield optimization platform. For us, that means that we want to be able to support clients with a range of different features that operate in both a high interest rate environment and a low interest rate environment, which will be a combination of the FX pieces and the debt management side as well. So I think that interest rate change will be really positive for the industry as a whole and start to increase funding in fintech. So I think we'll start seeing that flow through next year and the year after.
Yeah, and that movement in interest rates, creates the direct need for a CFO and virtual operations. But really enjoyed it, Ben, and thanks for the conversation.
Yeah, not at all. Pleasure. Thank you very much.